Look, I'm going to be direct with you. What's happening in the silver market right now is something I haven't seen in my entire career, and I've been watching precious metals for over 2 decades. The signs are everywhere. The data is screaming, and yet most people are completely missing it. Let me paint you a picture of what's unfolding right now, because this isn't just another market cycle. This is a fundamental shift that's been building for years, and we're now at the inflection point where everything changes. Silver just posted gains of over 21% in a single year. Now, you might be thinking, okay, that's nice, but so what? Here's what. That's just the warm-up act. That's the market clearing its throat before the real performance begins. Because what's driving this move isn't speculation, it isn't hype. It's something far more powerful and far more permanent. We're looking at the 5th consecutive year of supply deficits in the silver market. Think about that for a moment. 5 years in a row where the world has consumed more silver than it's produced. 5 years of drawing down existing stockpiles. 5 years of the gap between supply and demand getting wider and wider. And here's the kicker. It's accelerating. The industrial demand for silver has exploded in ways that most investors don't fully comprehend. We're not talking about jewelry or coins here. We're talking about the backbone of the modern technological revolution. Every solar panel that gets installed, every electric vehicle that rolls off the assembly line, every 5G tower that gets erected, every data center that gets built to handle artificial intelligence processing, they all need silver. Lots of it. And unlike gold, which you can recycle efficiently, silver gets consumed. It gets used up in tiny quantities across millions of applications, and it's often not economically viable to recover it. It's gone. Forever. Let me give you some numbers that should make your jaw drop. The solar industry alone is projected to consume over 160 million ounces of silver annually. Electric vehicles use anywhere from 25 to 50 grams of silver per vehicle, and we're talking about millions of these vehicles being produced every single year. The electronics sector, the medical industry, the defense sector, they're all competing for the same limited supply. Now, here's where it gets really interesting. While demand is surging, what's happening on the supply side? Mining production has essentially plateaued. We're not discovering major new silver deposits. The existing mines are getting deeper, more expensive to operate, and the ore grades are declining. It costs more to pull less silver out of the ground. And here's something most people don't realize. About 70% of silver production comes as a byproduct of mining other metals like copper, lead, and zinc. So silver miners can't just ramp up production because the price is rising. They're constrained by the economics of the primary metals they're actually mining for. This creates a situation that's almost unprecedented in commodity markets. You have explosive demand growth running headlong into stagnant supply. And the gap between the two is being filled by drawing down above-ground inventories that have been accumulated over decades. But those inventories aren't infinite. They're running out. I want you to think about what happened in the nickel market recently. Prices went absolutely parabolic when a supply squeeze hit. Trading had to be halted. Contracts were torn up. It was chaos. Now imagine that happening in silver, but with far broader implications because silver is embedded in so many critical technologies. The smart money already sees this coming. Central banks, which have been accumulating gold at record pace, are starting to look at silver differently. Institutional investors who dismissed silver as just an industrial metal are suddenly doing the math and realizing what's about to happen. Here's a story that illustrates what we're dealing with. There's a major electronics manufacturer, I can't name them, but they're a household name, that recently tried to secure a long-term supply contract for silver. They wanted to lock in pricing for the next 3 years. You know what happened? They couldn't find enough willing sellers at any reasonable price. The physical market is that tight. And this is happening while the paper market, the futures and derivatives that trade on exchanges, shows a completely different picture. There's a massive disconnect between the paper price of silver and what it actually costs to secure physical metal for delivery. This disconnect can't last. It never does. Eventually, reality asserts itself, and when it does, the price adjustment is violent and swift. Let me take you back to a similar situation that played out in the past. In the late 70s, silver went from around $5 an ounce to $50 in a matter of months. Now, That was driven by the Hunt brothers trying to corner the market, which is a different mechanism. But the underlying condition was the same, a supply-demand imbalance that created explosive price action. We're setting up for something potentially even more dramatic, because this time, it's not speculators driving it. It's fundamental industrial demand that isn't going away. You can't shut down the solar industry. You can't stop the electric vehicle transition. You can't halt the build-out of 5G infrastructure. These are multi-trillion-dollar technological shifts that are locked in for decades, and every single one of them needs silver. Now, I know what some of you are thinking. But what about substitution? Can't they just use something else? Great question. And the answer is, not really. Silver has unique properties that make it irreplaceable in many applications. It's the most conductive metal for both electricity and heat. It's the most reflective. It has antimicrobial properties. It's malleable and ductile. Sure, in some applications you can substitute copper or aluminum or other materials. But you lose efficiency, you lose performance. And in high-tech applications where performance is critical, that's not acceptable. When you're building a solar panel, you want maximum efficiency. When you're building an electric vehicle, you want maximum range. Silver delivers that in ways that alternatives simply can't match. Here's another angle most people miss: the geopolitical dimension. Silver mining is concentrated in just a handful of countries: Mexico, Peru, China, Australia, Chile. These 5 countries account for the majority of global production. What happens if trade tensions escalate? What happens if resource nationalism takes hold and countries start restricting exports? We're already seeing hints of this. Countries are starting to view strategic minerals differently. They're recognizing that control over these resources is a form of power in the 21st century. And silver, given its critical role in green energy and advanced technology, is absolutely a strategic mineral. Imagine a scenario where a major producing country decides to prioritize domestic use over exports, or where supply chains get disrupted by political instability. The price impact would be immediate and severe. And speaking of geopolitics, let's talk about what's happening with currencies. The dollar has been the world's reserve currency for decades, but that dominance is being challenged. Countries are diversifying away from dollar reserves. They're settling trade in alternative currencies. They're accumulating hard assets. This is where precious metals come into play. When confidence in fiat currencies erodes, people turn to tangible stores of value. Gold gets most of the attention, but silver is gold's little brother that often moves even more dramatically on a percentage basis. Quick aside here, because this is important for anyone thinking about their financial future. If you're sitting on a substantial retirement account, we're talking 6 figures or more, you might want to look into how precious metals can fit into that picture. I put together a comprehensive guide on gold IRAs that covers how you can get physical metals into your retirement account without triggering tax penalties. It's in the description below. No pressure, but if wealth preservation is on your mind, it's worth understanding your options. Anyway, back to what's happening in the market right now. The technical picture for silver is setting up beautifully. We've broken through key resistance levels that held for years. The chart pattern looks like a textbook accumulation phase followed by a breakout. Volume is confirming the move. Momentum indicators are turning positive. But here's what really matters. The fundamentals are backing up the technicals. This isn't a false breakout driven by speculation. This is a genuine supply-demand imbalance expressing itself in price. Let me walk you through what the next phase could look like. Right now, silver is trading in a range that most analysts consider undervalued relative to gold. The gold-to-silver ratio, how many ounces of silver it takes to buy 1 ounce of gold, has been historically high. It's been sitting at levels that have only occurred a handful of times in the past century. When this ratio reverts to its historical mean, and it always does eventually, silver has to either rise dramatically or gold has to fall dramatically. Given everything happening in the world, the debt levels, the money printing, the geopolitical tensions, which scenario seems more likely? The ratio reversion alone could drive silver substantially higher. But that's just one factor. Layer on top of that the industrial demand surge, the supply constraints, the inventory drawdown, and the monetary dynamics, and you're looking at a perfect storm of bullish catalysts. Here's a scenario that keeps me up at night. and it should concern anyone who understands these markets. What happens when the industrial users of silver, the companies that actually need physical metal to manufacture their products, realize that supply is genuinely constrained? What happens when they start panic buying to secure inventory? We've seen this movie before in other commodity markets. When users get scared about supply, they start hoarding. They build up inventories beyond what they need for immediate production. This creates a feedback loop where buying begets more buying, and prices spiral upward. And in silver's case, the market is relatively small. The entire annual production of silver is worth maybe $30 billion. That's nothing in the context of global financial markets. A few large institutional investors deciding to allocate even a small percentage of their portfolios to silver could overwhelm available supply. Think about what happened when Tesla announced they were buying Bitcoin. The price went parabolic because a single large buyer entered a relatively small market. Now imagine multiple large buyers entering the silver market simultaneously, all competing for limited physical supply. The exchange-traded funds that hold physical silver have been seeing inflows. Investors are waking up to the story. But here's the thing, those ETFs have to actually buy physical metal to back their shares. They can't just create paper claims. So every dollar that flows into silver ETFs translates into real buying pressure in the physical market. And the physical market is already tight. Premiums for physical silver, the amount you pay above the spot price to actually get metal in your hand, have been elevated for months. Dealers are struggling to source inventory. Mints are running at capacity and still can't keep up with demand. This is not normal. This is what happens when a market is on the verge of a major move. Let me tell you about a conversation I had recently with a bullion dealer who's been in the business for 30 years. He told me that the current environment reminds him of the period right before silver's massive run in the early 2000s. Back then, there were similar supply concerns, similar industrial demand growth, and similar tightness in the physical market. Silver went from around $5 to nearly $50 over the following years. Now, I'm not saying we're going to see a tenfold increase. I'm not making specific price predictions. But I am saying that the setup is remarkably similar, and the fundamental drivers are arguably even stronger this time around. Because here's the thing, the industrial demand in the early 2000s was nothing compared to what we're seeing now. The solar industry was in its infancy. Electric vehicles were a curiosity. 5G didn't exist. Artificial intelligence wasn't consuming massive amounts of computing power that requires silver-laden electronics. The demand drivers today are orders of magnitude larger and more entrenched. This isn't a cyclical uptick in demand. This is a structural shift in how the global economy functions. And it's happening at a time when mining companies are struggling. The easy silver has been mined. New projects take years to develop and require massive capital investment. Environmental regulations are getting stricter. Labor costs are rising. Energy costs are rising. The all-in sustaining cost to produce an ounce of silver has been climbing steadily. Many silver miners are barely profitable at current prices. If prices don't rise, we're going to see production cuts. Mines will close. Supply will contract further. And that will only exacerbate the supply-demand imbalance. It's a vicious cycle from the supply side, but a virtuous cycle if you're holding silver. Now, let's talk about what the big institutions are doing, because that's always a tell. The commercial traders on the COMEX, the futures exchange where silver trades, have been adjusting their positions. The smart money that typically sells into rallies has been less aggressive about shorting. That's significant. It suggests that even the traditional sellers recognize that something different is happening this time. Meanwhile, the Commitment of Traders report shows that large speculators are building long positions. Money managers are getting bullish. And this is still early. We haven't seen the kind of speculative frenzy that marks a top. We're in the phase where informed investors are quietly accumulating before the crowd catches on. This is the opportunity. This is the window. Because once the mainstream financial media starts running stories about silver shortages and price spikes, it'll be too late to get in at reasonable prices. The train will have left the station. And that's not hyperbole. That's how these moves work. They start slowly, with fundamentals improving and smart money accumulating. Then they accelerate as more investors recognize what's happening. And then they go parabolic as fear of missing out kicks in, and everyone rushes for the exits at once, except in this case, They're rushing to get in, not out. I've watched this pattern play out in multiple commodity markets over my career. Oil in the mid-2000s, copper during the China infrastructure boom, lithium more recently as electric vehicles took off. The pattern is always the same. Fundamental shortage leads to price discovery, leads to speculative mania. Silver is setting up for exactly this kind of move. The fundamental shortage is already here. We're in the early stages of price discovery. The speculative mania hasn't started yet, but it's coming. Here's another piece of the puzzle that's often overlooked. Silver has a dual nature. It's both an industrial metal and a monetary metal. It's been used as money for thousands of years. It's mentioned in the Bible. It was the basis of currency systems throughout history. And even though we're not on a silver standard anymore, that monetary heritage still influences how people think about it. When economic uncertainty rises, people remember that silver is real money, not a promise, not a digital entry in a database. Physical metal that has intrinsic value and has been recognized as valuable across cultures and throughout history. We're entering a period of significant economic uncertainty. Debt levels are at all-time highs. Central banks are trapped between inflation and recession. Geopolitical tensions are escalating. The post-World War II global order is fracturing. In this environment, the monetary aspect of silver becomes increasingly relevant. People will want to hold tangible assets. They'll want something that can't be printed, can't be debased, can't be confiscated with a keystroke. Silver fits that bill perfectly. And unlike gold, which has become expensive for many average investors, silver is still accessible. You can still buy meaningful quantities without breaking the bank. This accessibility is important because it means silver has a broader potential investor base. When the rush into precious metals accelerates, silver will benefit from both institutional buying and retail buying. That's a powerful combination. Let me paint you a picture of what could unfold over the next few years. Industrial demand continues to surge as the green energy transition accelerates. Supply remains constrained as mining production struggles to keep pace. Inventories continue to decline. The physical market gets tighter and tighter. At some point, a major industrial user can't source the silver they need. Maybe it's a solar panel manufacturer. Maybe it's an electronics company. They go into the market willing to pay whatever it takes to secure supply. That sets a new price floor. Other industrial users see this and panic. They start building inventory. They start signing long-term contracts at elevated prices. This buying pressure pushes prices higher. Investors notice. The financial media starts covering the story. Silver becomes the hot trade. Speculative money flows in. ETFs see massive inflows. The futures market goes into backwardation, meaning near-term prices are higher than future prices, which is a sign of acute shortage. Prices spike. Maybe they double. Maybe they triple. Maybe they go even higher. And suddenly, everyone who dismissed silver as just an industrial metal is scrambling to get exposure. This isn't fantasy. This is how commodity markets work when supply and demand get out of balance, and all the pieces are in place for exactly this scenario to play out in silver. The question isn't if it's going to happen. The question is when. And based on everything I'm seeing, the data, the market structure, the fundamental drivers, we're closer to when than most people realize. The supply deficit is widening. Industrial demand is accelerating. Inventories are declining. The physical market is tight. The technical setup is bullish. The monetary backdrop is supportive. The geopolitical environment favors hard assets. Every single factor that drives commodity prices higher is present in the silver market right now, and they're all pointing in the same direction. This is what a major market move looks like in its early stages, before the crowd catches on, before prices go parabolic, before it becomes obvious to everyone. The smart money is already positioning. The question is, are you going to wait until it's obvious when prices have already moved significantly higher, or are you going to recognize what's happening now while there's still time to position ahead of the move? Because here's the reality. Opportunities like this don't come around often. Maybe once or twice in a decade, you get a setup this compelling in a major market, where the fundamentals are screaming, the technicals are confirming, and the crowd hasn't caught on yet. This is one of those times. The silver market is at an inflection point. The train is at the station. The engine is running. The doors are still open. But they won't stay open forever. Everything I've laid out here, the supply deficits, the demand surge, the inventory drawdown, the technical breakout, the monetary dynamics, the geopolitical factors, they're all real. They're all happening right now. And they're all pointing towards significantly higher silver prices. You can choose to act on this information, or you can choose to wait and see. But understand that waiting has a cost. Every day that passes, more investors figure out what's happening. Every day that passes, the physical market gets tighter. Every day that passes, prices move higher. The opportunity is now. The setup is clear. The risk-reward is compelling. And the potential upside is substantial. Silver is about to leave the station. The question is, are you going to be on board when it does?